All right. Well, hey, I'm Dean Jenkins of Follow Me Trades. And like David said in the intro, he and I actually came up with this Analyze Your Trade like 7 years ago now. Wow. But yeah, it's fun to be here. And I love looking at charts, analyzing charts, trading, talking to traders. So happy to be here. And I'm showing the S&P 500 right now, the SPY, the S&P 500 ETF. Um, And just if you look at it, I've drawn a couple lines here, got this little red line on the bottom, on the top. I think we're forming into a wedge, right? If we zoom out real quick, right? Everybody knows we've been in a multi-year uptrend on the S&P 500. And, the question's always, is there going to be a correction? When would it start? Right? And, history tells us there'll probably be one before, at some point it'll pull back. And I like this wedge. If price breaks down out of it, there's typically a follow through to the downside. So if price breaks down out of this wedge, and here's the 50-day moving average, which is kind of a support level now. If we break down through that and through the Ichimoku cloud, we could have at least a correction like we did back here, maybe even something bigger. So I'm watching that really close. So I see Robert is looking for EXEO. So I'll be happy. What are your thoughts on that one, Robert? Just not sure? You thinking long? You thinking short? If you're able, type that in. So here it is. I don't know this company, Exelixis. You can see they've been pulling back here lately. It looks like there was some kind of news that came out. It dropped. It wasn't earnings back here, and now we got earnings here. I always like to zoom out and look at the big picture first. What's been going on in the last couple of years? And so this one has had a pretty nice gradual run up, gapped up here on earnings, got a little volatile. Now some kind of news came out and it pulled back. So also you can see I've got a little indicator here. It shows me, what's the volume on this so far today? So far it's 3 million shares. I just always like to do a quick check, make sure, we got good liquidity. I don't want to trade something that's super thinly traded, right? So in terms of what to do next, right? It's channeling. It had this drop, whatever the news was, right? I don't know. I don't know the company. Now it's stuck in a channel. So it's had this big long run up. It is starting a correction. And if you actually do a Fibonacci retracement, oops. Get this back. Okay. If you do a Fibonacci retracement on this, get the right tool in place here. All right. Just in terms of after a big run up, we know that there's quite often a pullback, right? I would measure it from here, right? I think it's got farther to go down. So given that it's dropped, it's had that huge run up, and now it's going flat. I'm not a fan of going long on this at this time. You could make a case to go short, maybe, if it were to drop below this current support level. That's just my quick thoughts, not knowing anything about this company. And so Robert just said swing trade was his idea. Yeah. And so if anything, I'd be interested in going short if it falls through this current support level. So hope that's helpful to you. Sam wants to look at SMCI. Is that Supermicro? It is. Well, that's been a wild ride, hasn't it? And it's been in the news. Most people have heard of it. Yeah, it is Supermicro. All right. So big picture, right? Early last year, just a phenomenal run up, and then kind of right back to its normal, where it was. Now it looks like it's trying to start another move up here. We had late last year a move up, then a pull back into this year. Now it's heading up. So how would we trade this now? And again, it moves, on a percent basis, huge. Of course, look at the volume here so far today, 137 million shares. So yeah, liquidity is not a problem, not a concern for Supermicro. All right, so after the lows, it came down. It found support here. It headed up, then it drifted down. Now it's heading up. What in terms of a long, what I don't like is how the moves, kind of getting smaller, right? And we can see that in the price oscillator, right? The momentum is kind of coming out of it. So before I got excited about going long on Supermicro, and you can see a resistance level, right? That, it's just a level that price went up to and has failed multiple times. And it's right in here. Came up, failed, came up, failed. Well, way back, came up. So before I would go long on Supermicro, it would have to get through this resistance level that it's had trouble at. And you can see this line right here, this darker white line, heavier white line, is the 200-day moving average. By the time we get up there, that's going to be right at about here. So I'd like to see it get through both. And then could it start, a whole new uptrend? Maybe. But in terms of swing trading Supermicro, for me, it's got to get through this resistance level. And there's obviously no case to go short for it because the last 4, 5, 6 bars are up. So Sam, happy you or anybody else, what do you think of that analysis? Do you agree with that? Disagree? That's fine. But yeah, I look for these, both support and resistance levels for sure. All right, BTC, grayscale. No, just BTC is Bankers Trust, something Bankers Trust. Okay, so 750,000 shares so far today. Oh, there it is. So this must be a fairly new issue. Is this the right symbol, BTC? That's kind of a strange presentation, and it looks like that may have just IPO'd back here. Just not much price action, right? Not much going on there. So I'm not familiar with it at all, and it's actually kind of newer than I like to trade. So yeah, it's not my thing. And you see how there's a little gap every single day? What that tells you is it's you know, a foreign company that's listed on the US exchanges. It trades on another exchange. When you see these daily gaps, that's almost always what is going on there. So that one doesn't, I don't really have. Oh, so not Bankers Trust Bitcoin. Maybe just give me an exact symbol. We can look at GBTC as a ETF. So sorry, I did all that analysis and it wasn't what you wanted. All right. GBTC, this is the Bitcoin ETF. Is Bitcoin going up? Maybe, all-time highs, pullback. The new administration is crypto friendly. It's currently below the 50-day moving average. The cloud has gone neutral. So it'd have to get above this for me to be excited about going long on that. All right. Arju, Lumen, Lumn. All right. 5.3 million so far. So I think our liquidity filter, criteria has been passed. Sliding down, it's through the 50-day moving average. It's right at the 200-day moving average. We can observe that now. Man, it just fell out of favor and out of grace and became, virtually a penny stock down here. And then obviously, right as earnings came out, there was obviously some good news up, a little pullback up, now down to support. Okay. So is there a trade there now? Well, don't go short. Don't go short into support unless it breaks down through that 200-day moving average. I won't. Do what you want. But look how it's finding support there. So I would be looking for evidence that a new uptrend is beginning. What does evidence look like? Well, an uptrend is by definition, like over here, a series of high, higher, low, high, ultimately higher, highs. So highs, higher lows, higher highs. Downtrend is low, lower high, low, lower high, low, lower high. So we're currently in a downtrend. Look how the momentum is coming out of the downtrend, though. It's flattening. It's got a support area. So I would look for high, higher, low, new high, and to get above the 50-day moving average. So that certainly isn't ready yet. It may take a little time. That's worth watching. And these lower priced, higher volatility things can move percentage-wise, huge, right? What was its last high? Just, back in November, $10, right? And it's sitting here just under $5. So, if it did nothing but get up to the prior high, that's a double. So that's worth, I'd like to watch this one again for evidence. High, higher, low, new high. See the price oscillator turn positive would be good. Maybe the Ichimoku cloud, which is the shaded area, turn green. And then, look at the reward to risk. I would set an initial target up here at this prior high. What price are we at? By the time it's proven that an uptrend is starting, how much more profit is there? And, I like to place my stop, when we make a high, higher, low, new high, that gives us support areas to put a stop. And then we can look at the reward to risk ratio. Okay, based on the logical stop and then the target, what's the risk to reward? But this one could turn into be a very, very good one. So definitely worth keeping an eye on there. So thanks for that one. And that was Raja, Barry, SMR. All right. I know I've seen this symbol. Obviously, I've done some analysis at some point, some drawing on it. Go ahead and take it off because I think that's old. All right. Yeah, quite a few times. SMR, I know the symbol. I'm trying to think what company that is. And a great resource if you're unsure, just go to Yahoo Finance. It's free. You don't even have to sign up. They give a great snapshot, kind of a profile. Come on. Not that one. SMR. Oh, New Scale Power. Okay. And New Scale Power, that's why we've looked at it. They are nuclear, right? Modular light water reactor nuclear plants. That's right. Okay. Now I'm calibrated. I know what we're talking about. And I traded that one before. We did well on it. Okay. Here's what I like a simple version of Elliott wave when the chart, kind of justifies it. And it does in this case. We've got a big impulsive move up. We've got a correction. And now we've got a continuation. So what I like to do is just go, what's our Fibonacci retracement lines? And it went perfectly into this expected retracement zone. And so from there, we can go, what's the extensions? Using a simple Elliott wave analysis and Fibonacci extensions, where's this expected to ultimately go? And the answer is up into this target zone from here to here, these green lines. So it's got a long way to go, right? And we're currently sitting at 2658, and we got a target midpoint, kind of high 30s. So, add $10 to a $30 stock. I like that. So is it ready for a long trade now? Remember I said I like to see evidence of an uptrend, and here it is. We talked about it. High, higher, low, high, higher, low. We haven't made a new high yet. And it's, struggling a little bit. We got earnings coming up here 27th, 15 days. So that's not too far off. There is time. I think I would like to see it continue this uptrend. So if it were to continue to kind of break through this, right? And we could then set a stop. Well, if it pivots hard here, this would be a pivot point, a support level. So let me color that so you can kind of see it. Get the right tool. So let's make that a red line for our stop. And then here's my trigger, so I'll just make that a blue line. Right, so if we were to trigger here, just put in a new high in this current move, put a stop here, we got a target up in here. That, let's just draw a target line. We have to just put it right in the middle. Make it green for profit. Right? We can let me get rid of this so you can just see it more clearly. Right? The reward to risk, right? We enter here, here's the risk, here's our stop. Enter here, here's our reward. Right? That's like a 3-to-1. So I like this one. This works absolutely worth keeping an eye on. So SMR. And again, I've traded it before. I like it. Okay. Well, we're getting a bunch here. Hope we have time to get through them. Okay. Raju again, Amgen. Well, it's pretty popular biotech. Pretty spendy, $305. Of course, our volume is just fine. Big picture. Boy, look at this. Kind of a repeating pattern, right? A run up and then a swoon, right? Almost exactly the same shape there as there, right? So, wow. Excuse me. Couldn't mute before I sneezed. I apologize. Um, Now, last time it came down to the 200-day, it pierced it a little bit, then took off. This time it came through, right? The 200-day, which had been a reasonable support area here. This time it went right through it. And so what it actually looks like this time is what used to be support is now resistance. The 200-day moving average, right? Price came up to it. It can't get through it. So I don't want to take that long into that resistance. It would have to get above here before I would have any interest at all in going long on Amgen. Now they are through earnings, right? And 502 estimate came in at 531, so they beat. They got a dividend coming up, go ex-dividend on the 14th, so Friday. And often on the ex-dividend date, there's a drop. Not usually huge. Typically, it's by the amount of the dividend. So I would let it get through all that. Right. The earnings were pretty good. It jumped on it. Right. So go long, I'd have to get above the 200-day moving average, get through the dividend, and then have a look. Yeah. So, and that one's it's a tough one. So I'm not trading that one. That's my analysis. But I'm not going to read. There was some other ones that I liked. SMR. I liked most of what we looked at here so far. Robert, ADMA. All right, so this is like a textbook Elliott wave. 1.3 million so far. I don't know the symbol ADMA. I don't know what that company is. Got an exclamation point. Because I like this pattern so much, I'm going to go look it up on Yahoo real quick. ADMA. If I'm going to trade something, I'm not a fundamental trader. I kind of want to know what I'm trading. What is the company? What sector are they in? What do they do? Well, there it is in the name, right? ADMA Biologics. It's kind of everything I need to know right there. All right. Yeah, regular profile. They biopharmaceutical company, immune deficiencies, infectious disease. Okay, great. All right. They are through earnings for the current cycle. Well, let's see. Gotta there's a question mark. So we don't know the earn. There it is. 226 is the estimated date. So, 14 days. It's getting pretty close. What I would like to see here. So what I said, this was a perfect Elliott wave presentation because we have this huge impulsive move up, really, really nice, came from, $3 up to the high 20s. Wow. And then this perfect correction. And so we can just look at that, the Fibonacci retracement right into this expected zone and look at how it hit the 200-day moving average, and now it's finding support there. So all we need is evidence of an uptrend beginning, and this could be good. But right now we've got low, lower, high, low, lower, high, low. So that's a downtrend, right? If we were to turn this and start doing high, higher, low, new high, coming off this support level, that could be good. That may be a few weeks out. It may be past earnings. Earnings could be the catalyst for that. So that's one, I would just put that on a watch list. In fact, I will, ADMA. So here's my watch list. ADMA. And that other one, SMR, right? Remind me to keep track of them because could be good. So thanks for that one, Robert. Avaz, AVA2, and I don't know how to say that. CRDO. I don't think I've heard of that. I'm always excited when I see a new symbol. It's like, oh, maybe it's something cool. It gaps, boy. It gaps. You see these gaps here? That was on earnings. Gap up. That was not on earnings. There was a gap down. Some kind of news came up. We've got earnings expected around the 26th. 3.1 million shares. Okay. Huge gap up here. Gap down here. This thing's pretty unpredictable. These huge gaps. I'm not a huge fan of them. And we got earnings coming up, right? I wouldn't be going long with it currently heading down. Wouldn't be going short because it's got support levels. So I just don't see anything there on CRDO. Sam Goyle, monster. And I don't know, David, when I wanted to talk just briefly about my book. Is this the time
Oh
we should?
yeah. Yeah, go for it. Yeah.
Okay, so hey, if you are intrigued by what I'm doing here, this analysis, I try to keep it pretty low key. I do have a pick service, stock and option picks. We have a live trading room in the mornings, but I'm pretty excited. I just launched my latest book. It's on Amazon. It's called The 7 Habits of Successful Traders. Right, and it's not about indicators or which instrument you trade. This is really about uh, the mindset. Right? What is it that the best traders do, in terms of just how they view trading, how they view the market, what do they do over and over and over, regardless of their indicators, their instruments. I've been doing this a long, long time. I've talked to hundreds and hundreds of traders. And so I've kind of tried to cull out what it is that makes people successful, right? And it's of course risk management, capital preservation, approaching the market. Every trade could lose, so let me limit how much I lose, right? Some resilient psychology, because we know some trades are going to lose. It can really be a drag, right? Trading plan, how to develop a trading plan, how to follow a trading plan, right? Just some strategies just to have the right mindset. So I would love to have you buy my book, right? And David has put a link up to it. And I make a little bit on each book, right? The Kindle version is $9.95. It's not very expensive. Paperback's $14.99. I make a couple bucks. I think you would find it helpful. And the more people that buy it, then the more Amazon pushes it up in the search results, and so it gets some momentum. So, man, I'd be honored if you'd buy the book. I think most people would find it helpful. And if you do, as kind of a thank you, I'd give you a free guest pass to come join our live trading room tomorrow. So, go buy the book. It's $9.95 for the Kindle version. You'll have it immediately. And then send me an email. Hey, Dean, I bought the book, man. And I will send you a guest pass. And here's my email in the chat, Dean at followmetrades.com. Buy the book. I will send you a guest pass. You can come into our trading room tomorrow and you can see the actual trades that we're taking. We can see the watch list of what we're looking to trade next, and then what we are actually currently trading. And here's a trade. I'll give you one that I do like right now, and this is a Frontline. Right? I've talked about, Frontline got a little beat down, nice correction, starting a new trend. There's really clear evidence that that new trend is starting. And I think, just on this pullback to support, we got a nice entry here. So Frontline, right? Earnings, we got a couple weeks. So I think that's a nice swing trade long. I also get into dividend trades, right? So these are swing trades. We're going to be in them a couple days to a week, right? Just trying to capitalize on a move. But then I like to find longer term buy and hold stocks that pay a good dividend. And my whole deal for a dividend stock is the typical dividend strategy says, well, just buy it, forget about share price, just collect your dividends. And, hold on, time out on that, man. I'm going to pay attention to the share price. I'm not going to sit through, something like Walgreens Boots, which was a dividend recommended stock for years. And then it's lost 90% of its value. No, thank you. So I want a long-term, blue chip company that's going to pay good dividends, but it's also going up. Why not get the share price appreciation and the dividend? And one of my favorites right now is Papa John's. And so I got in here, booyah, they're taking off. It's been beat down, but it's a solid company, right? And so it's got really nowhere to go but up. And while it does that over a couple year time, we can collect dividends. It pays 6 or 7% dividend. And just one more for fun. I like Sirius XM, and I'm in good company. Mr. Buffett likes it as well, and he's buying it. Again, it's been beat down. It pays a great dividend. So Sirius XM, long-term buy and hold kind of thing. Share appreciation, collect the dividends. Not swing trading, dividend trading, different, but I like those two. So there's a couple ideas. And I think I'm up against the clock. I think we brought it in right on time. So back to you, David. Or do we have